What's up, freaks? It's your boy Marty here to introduce this episode of Tales from the Crypt. Very interesting episode. Touched on DeFi. Trigger warning. But done the right way, hopefully. I sat down with Matthew Black from Atomic Finance, formerly Atomic Loans. Actually, don't know if they've officially made the switch yet. Sorry, Matt, if I'm blowing up your spot here. But to talk about his experience building out a non-custodial Bitcoin collateralized loan product on Ethereum, why he's moving off of Ethereum, and how he thinks Bitcoin is a better platform to build on, specifically for things like DLCs and smart contracts. Very interesting episode. Very inspiring young man we have in Matthew Black. He's only 22 and he's building some incredible products. So you guys are going to enjoy this episode. This episode is brought to you by our good friends at the motherfucking Cash App. You should know about them, but if you don't know about them, let me tell you what. The Cash App is helping us do many things. They're helping us stack sats, send sats, receive sats, and sell sats, if you so please. It's sats, because sats is the standard. We're not buying fractions of Bitcoin anymore. We are buying whole sats, stacking whole sats. On top of that, you can DCA into sats, dollar cost average. You can set it and forget it. Daily, weekly, bi-weekly. If you have a certain amount of Bitcoin that you want to stack on a set cadence, you can do that via the Cash App. On top of that, they have Cash App investing, which allows you to invest in slivers of stonks. If you're into the stonk market, you can stack a sliver of a stonk now via the Cash App. If your favorite stonk's a little too expensive, you can buy as little as $1. And because all this is connected directly to your bank account, there's no 4 to 5 day waiting periods to start investing. You can start investing today, okay? Cash App Investing is a subsidiary of Square and member SIPC. As always, make sure you use the code STACKINGSATS. That's STACKINGSATS. You're going to get $10, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Owls Lacrosse. Hope you guys enjoy this episode with Matthew. Enjoy your weekend. Enjoy your life. Be happy that we're here. Take advantage of the fact that you are here. Take
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here on a cool Tuesday evening. Second podcast of the day. Matthew, you'll be interested to hear. This is the second podcast of the day in a different state. The first podcast was recorded this morning outside of Philadelphia, Pennsylvania. Now I'm back in South Jersey in Cape May County. I'm sitting down with Matthew Black, co-founder of Atomic Loans, and we're here to talk about a lot of things today. Matthew, how the hell are you doing?
I'm doing great, Marty. Yeah, we have quite a bit to talk about. We've been moving more into the Bitcoin space lately and leaving Ethereum. So it's going to be interesting.
Yeah, there's a very controversial project. Atomic Loans is people shit on you for being on Ethereum, and then people are shitting on you for leaving Ethereum. So you're between a rock and a hard place, it seems. And we'll try to pull on the thread to how you got to this point. So first, like, how did you come to start Atomic Loans? I guess we should define Atomic Loans, what you guys offer as a platform, and why you are transitioning. I guess we can elaborate on each part of that a little bit longer. I can come back to those questions.
Yeah, absolutely. I guess we should probably start with how I originally got into Bitcoin. It was actually back in 2014. It was my dad that actually introduced me to Bitcoin. He's a bit of a gold bug, has gold underneath his bed and whatnot. And so he had introduced me to it. I was kind of just managing his funds for him, and kind of forgot about it for a little bit. And then it was in 2017 where I was at Tony and myself co-founder of Atomic Loans. We were at University of Waterloo. He was my roommate. I wouldn't shut up about kind of what was happening in Bitcoin and in the crypto space in general. And we were actually roped back into the space, being developers. We got roped into kind of what was happening in Ethereum. I think they create kind of on the face of things, they make it very appealing to developers with all the developer tools, and ended up working on actually atomic swaps between Bitcoin and Ethereum. And it was there actually working at Liquality that I learned a lot more about the Bitcoin side of things, Bitcoin scripts. Went down the rabbit hole of what is sound money and what are the kind of assurances that Bitcoin brings to the table that, just is not, not comparable with Ethereum per se. And so after working on kind of atomic swaps and kind of the cross-chain aspect of things, we realized, well, there really isn't any type of kind of financial tools for Bitcoin, that were really non-custodial at the time. You had the ability to do finally atomic swaps with Bitcoin, but there really wasn't a way to be able to get access to, say, liquidity, without giving up custody of your Bitcoin, for example. And the example I give is, we were moving to Toronto. Our landlord wanted 4 months rent up front, and we didn't want to sell our Bitcoin, to pay for it. And so a Bitcoin-backed loan is perfect for that. But in today's environment, really the only ways to do that is to lock it up in the custody of an institution. And of course, many different ones have different kind of different risks involved with them. But we really didn't want to do that. So we said, hey, let's go out and build something that allows for the creation of non-custodial Bitcoin-backed loans. And at the time, really, the only way to do that, the only way to be able to get access to any type of, like fiat in a trust-minimized way was with a stable coin, which happened to be on Ethereum. And so we said, let's go build, a cross-chain thing that allows for non-custodial Bitcoin-backed loans. And that's kind of how Atomic Loans was born. More recently, we've been, kind of more concerned with kind of what's happening in the Ethereum space and the kind of degen activity that's been going on. It's just really not in line with our values. And so we're going in a bit of a different direction.
Let's dive into that a little bit. What specifically about it? The fact that, or I won't put any words in your mouth. What about the quote unquote degeneracy that's playing out in the DeFi world rubs you the wrong way?
Yeah, I think part of it was for us, like our goal was always to build, sound infrastructure for sound money. And the reality is that a lot of aspects of Ethereum are not particularly sound. I mean, obviously we have the supply of Ethereum, concerns of it, but also there's a lot of questions, I think, around the architecture. So, I mean, recently, if you think of, for example, Tether, or the various tokens that are printed on Ethereum, a lot of people don't realize that those are very parasitic to the underlying chain itself. Anyone can go and print a token and drive up gas fees by exorbitant amounts, and there's nothing anybody can do about that. Meanwhile, you have a situation where the scaling solutions for Ethereum are kind of all over the place, right? You've got rated networks, Starkware, and each layer 2 for Ethereum has their own token. When you compare that to Bitcoin, where you have Lightning Network and everyone's kind of collaborating on the same thing to build a standard across the entire ecosystem. And so for us, I think, to be honest, for us, one of the problems was we realized that if we wanted to compete in building non-custodial Bitcoin-backed loans, and we wanted to build that had anything to do with the Ethereum space, we were going to have to launch our own token, and we just were not comfortable ever doing that, because why should you ever launch a token when there's perfectly sound money like Bitcoin that exists?
Yeah, I guess that's been a huge meme. Bitcoin on Ethereum, wrap BTC. I think I just saw the Matt Luongo and James Presswich just relaunched TBTC. And it's a bit confusing, right? Because is there really any Bitcoin on Ethereum? You can't send Bitcoin to an Ethereum address. So I guess you have up close and personal experience with these wrapped Bitcoin products? How do they work, and how is the description of Bitcoin on Ethereum potentially misleading?
Yeah, I mean, I think the reality is that these Bitcoins that are on Ethereum, you're completely right, Marty. Like these Bitcoins that are on Ethereum are not on Ethereum. They're Bitcoin IOUs at the end of the day. And anytime you have a Bitcoin IOU, it doesn't have the same assurances that real Bitcoin does. So we've seen really two types of Bitcoin on Ethereum that have been the most successful. One is WBTC, which is simply custodied by Bitcoin by BitGo. And so in reality, BitGo is a custodian for many things, many exchanges. And so it's no different than putting it on an exchange. And the other one is by Ren BTC. Now, Ren is actually a more concerning situation because they, right now it's really just custodied by the team. I think six team members or so are just custodying I think over $200 million worth of Bitcoin. It's supposed to be this decentralized network, but that's a work in progress for them. And so the majority of the Bitcoin that's on Ethereum is really custodied by a small number of people, and it's a Bitcoin IOU. TBDC is trying to do something a little bit different, but the challenge that they run into is all the Bitcoin that's locked for TBDC needs to be backed by Ethereum. And so why should why should the value of my Bitcoin that's being moved around be backed by an asset like Ether? Not to mention the exorbitant gas fees that are required to mint it are quite concerning. I think it was $140 today.
Yeah, it seems really ironic for a project whose founder at one point within the last few years said the internet of money should not cost more than 5 cents for a transaction. It seems like the people who would need to get transactions confirmed for 5 cents or less are getting priced out of that network specifically. And it's just a disingenuous, to me at least, a just disingenuous description of how these networks should work. Like Bitcoin embraces that. Like we're going to need higher fees to have higher security assurances, and we're trying to push the low cost payment network above the protocol level. It seems like Ethereum as a project will virtue signal one way at a certain point in time, and then just manipulate the narrative in their favor when things go against that. Hence today, DeFi is blowing up, miner fees are going up. Therefore, Ethereum is successful when success was defined only a few years ago as being able to send transactions at very low fees. So it's always confusing.
Well, yeah, and I think this kind of plays into some of the questions around the way that Ethereum is architected, and I think really there's some things from Ethereum that Bitcoin can learn, and there's some things from Ethereum that Bitcoin should learn not to do. And one of those things is everything should not be done at the base layer, because as soon as you do that, you have the situation where anytime anyone wants to do anything, it negatively affects everyone else wanting to do something on the network. And we should try to, and anytime we're building something, we should try to put as much things off chain as possible, such as building, financial contracts. So
yeah, no, that's actually a question I have too. Like, how much of Ethereum's fee pressure is due to actual demand for DeFi products, which is obviously somewhat considerable right now, versus the inefficiency of the chain? It's probably a combination of the two, but which one has more weight in that fee calculation, I guess, is a question I've had. I don't know if you can answer it, but
yeah, I don't know. Like, I think part of it is that there is no. I guess when you have whales that are able to, move the market or do things on chain that price out your average retail investor, or are able to spam the chain to do, whatever their agenda is, it doesn't matter. I guess the inefficiency of the underlying chain become apparent when whales are able to take advantage of it. I think that would be my 2 cents.
Yeah,
you might say something else.
Yeah, that's another question I have. Like, how many people are actually using DeFi, and how many how many whales? Is it just whales? Like, yeah.
Yeah. What are the real world use cases other than yield farming?
Yeah. Well, bringing this back to atomic swaps and stable coins, I mean, it is a fact. A lot of the most popular stable coins are built on top of Ethereum. So I'm interested to see, getting back to the roots of why you started atomic loans. How are you envisioning a stable coin being used either on Bitcoin or Lightning and creating a non-custodial product away from Ethereum? Very interested to hear that.
Yeah, absolutely. I think recently we've been excited by what's been happening right now in the RGB community. So for those that don't know, RGB is essentially a protocol that allows for for assets, simply for assets to be issued on top of Lightning. And so the idea is you're able to, for example, I know that Tether is planning to launch on RGB by end of year. And they're essentially, once you have Bitcoin and Tether on Lightning, things become a lot more interesting. And so, kind of where we're looking to head, kind of over the next, few months to a year, is to really be able to utilize the technology that's being developed by, RGB and Lightning to be able to allow for more advanced financial contracts. And I think one thing to mention here is, people might be thinking, okay, well, you're going and you're launching Tether on Lightning. What are the negative connotations of this going to be for Bitcoin? How is this negatively going to affect Bitcoin? And I think one of the really interesting things is, as soon as you bring asset issuance into the question, people immediately think, oh, is this going to allow for any shitcoin to be created? Is this going to be shitcoinery all over again with RGB? One of the nice things about it is that it's opt-in, which means that anybody can opt in to RGB, today and use whatever token they want, and they don't have to hold the data for any token that they're not interested in or doesn't align with them, for example. So I think that's one of the things that we're kind of excited for moving forward.
So sushi could be created on RGB, but it would not affect, at least to a material level, the fees at the base protocol and price out potentially
exactly.
what people would describe as more useful use cases.
Yeah, exactly. You could have sushi created, but only the degens who want to use sushi really need to have any involvement with it or be verifying sushi transactions, for example.
Can you explain sushi to me at all? It seems very. It's just.
Can I explain all the food items? We have sushi, we have yam. You know what? It's interesting, like sushi specifically, because they went and they just they took Uniswap and they just copied it, and then they created a token with it, and then after that happened, Uniswap went back and said, oh crap, like sushi, they just came along and basically stole our stole our product and stole our liquidity. And that's the thing in Ethereum, is like you can't compete unless you have some type of yield farming. And so Uniswap was basically forced. I think shortly after sushi was created, Uniswap went and launched their Uni governance token. And you really don't need a governance token. Uniswap's been working for 2 years, maybe even longer, and hasn't needed any type of governance token. But they felt pressure to do so because their investors are saying, well, sushi is really capitalizing on this, and we're not. We need to go launch something to make our returns on this product, and it's just really unfortunate.
Yeah, how does a governance token even function in this context either? Like, does it really have any? Is it like comparable to shareholder voter rights? And is it even used as a governance token, or is it just used as a way to attempt to make money via trading?
Yeah, I mean, I think, to be honest, like every project claims that these are non-speculative tokens, and these are specifically for the purpose of governance. But the reality is that they're mostly used for speculative purposes and very rarely used for governance. And so I think that's kind of the irony of all these tokens that are being created.
Yeah, and just conceptually, like, to flesh out the idea of a governance token, like, it doesn't seem very socially scalable, especially if you have whales in the mix. You sort of defeat the whole idea of democratic governance in the context they would like it to play out in. But I guess then Vitalik and crew would come back to you with quadratic voting and somehow try to force that into the situation. But yeah, and so just as a Bitcoiner and somebody personally who's focused on Bitcoin, write the newsletter, run this podcast, working in the mining industry now, hyper focused on Bitcoin. And there's always that lingering thought in the back of my head, like, am I the old boomer? Is this really a boomer coin? Am I missing out? Like, is this stuff really the wave of the future? And then what I've learned, having followed this stuff for 7 years now, is that inevitably all that trash, all that hype goes away. And Bitcoin is the mainstay that hasn't gone away. But it'll be interesting.
I think we need to realize the difference in philosophy. You know, the technology behind Bitcoin and Ethereum, really isn't that different. But the philosophy of the two camps is, on opposite sides, is day and night. And so, what's interesting is I think in Ethereum, everything is about high time preference. It's about, hey, how can I make as much yield today as possible and take advantage of the situation? And Bitcoin is, how can I build for the future? And how can I make sure that, what we're building today is the infrastructure that's going to be in place in 100 years? And I really think that's the difference in philosophy of the two camps.
Yeah, I would agree there. And it's that yin and yang. I want to call it yin and yang, but competing philosophies, and both camps seem, if we're just taking an objective outsider perspective, think they have the right mindset in this. And it seems like you're coming to believe in the long term. Let's build out infrastructure. And so how do you feel making this transition? Is it a big risk for you? You're confident in it? Do you lose sleep at night thinking about this, or?
To be honest, I think we were losing more and more sleep the longer we stayed in Ethereum, and the longer we stayed, building, not our whole protocol. I mean, half our protocol was in Ethereum. The longer we stayed doing that, we could just see, hey, gas fees are increasing. The need to create a governance token is increasing. Meanwhile, there's all these, amazing tools that are being built on Bitcoin. RGB, DLCs with, you had Ben Carmen on, and the SureBits guys and Crypto Garage are building great stuff. We have Lightning that's making strides. You have all these things that are coming to light that have been worked on for a long periods of times that, they took their time to actually, build the infrastructure properly, that are coming to light. Meanwhile, the infrastructure that exists in Ethereum is starting to go more and more downhill. And so for us, it was really like, we were losing sleep, staying in Ethereum.
Really? It's going downhill? From observing on Twitter, it would seem that many people close to the Ethereum project would say things are on the up and up right now.
I guess it depends how you look at it. I mean, do you measure progress as the amount of the amount, like, do you measure progress in terms of use cases, or do you measure progress in terms of the amount of capital that's moved around, between different projects? When you look at those two things, I think it paints a much clearer picture of, what are the real use cases, and what are the, shitcoin Ponzi schemes that are being created that allows for people to make money quickly and get out.
Yeah, that's a good point. So let's turn this focus to Bitcoin and the future of Bitcoin and the infrastructure you plan on building on. So RGB was launched earlier this year. It's pretty under the radar. I wrote a newsletter about it, I believe, like a month or two ago. It was like, hey, nobody's even talking about this, and I haven't really heard much since then. Like, so what's the development around that project looking like, particularly? Like, is it lively? Is there a lot of people dedicated to building that out? And then how does it even work from a technical aspect on top of Lightning? How does it interact with the Lightning Network, HTLCs, I imagine, and create this ability to create tokens?
Yeah, so RGB currently isn't out in the wild just yet. I think they're, well, technically they have their they're on chain, so they're layer 1 implementation done, but they're still working on integration with Lightning. And so the basic idea of how it works is that you have these assets that are issued that all this data is off chain. So none of this is going on chain. We're not using op returns. The idea is it uses this concept called single use seals. And so the idea is basically that, if I send a specific asset to you, you can prove basically that I sent that asset to you. And so the whole idea is that you have one issuer that comes, say you have Tether, for example, that wants to issue some, Tether on RGB. They go and they anchor it to a particular UTXO. So what's interesting here is it uses Bitcoin as a way to prove ownership, but not as a way to store data. And so everyone in RGB basically just goes and they verifies, okay, I have so much USDT, so I have 1,000 USDT, and it's anchored to this specific UTXO, or it can be anchored to this Lightning channel, and then I'm able to kind of use the same functions that exist in Lightning Network to be able to send transactions over the network. So some of the aspects of Lightning specifically still need to be worked out in the RGB protocol. For example, what does it mean to have a Lightning channel that has Bitcoin versus a Lightning channel that has Tether, for example? And then, can I, if I have one that has Bitcoin in it and there's another one that has Tether, can I route through it? Or doesn't it, or does an atomic swap occur? And, that's a whole nother part of it. So that the routing part of it, there's still a lot more development that needs to be done, but they're about, the latest I've heard is about a month and a half away from kind of a preliminary Lightning implementation that, people will be able to start playing around with. So that's definitely exciting.
Yeah. And again, it's underscored too. Why aren't people talking about this? Just because it's not in the wild yet? How's the developer community that you're close with? Are people excited about it? Again, there's very few people writing about it right now or talking about it.
Yeah, I think people are definitely excited about it. And there's been quite a few Bitcoiners that have kind of voiced, support for what RGB is trying to do. I think part of it might be that, people kind of, when they think of RGB, they think of colored coins, and, they think of colored coins not really having gone anywheres. And I also think that part of the reason is that there's not enough necessary kind of spotlight on what the use cases are for RGB. Once you start combining it with various things. So for example, if you take RGB and all of a sudden you have Tether on Lightning and you have Bitcoin on Lightning, well, now you can create a DEX between Bitcoin and Tether. And, as we all know, that's the most traded, that's the most used trading pair essentially. You can take, once you have, Tether on RGB, you could take Tether and you can use it in a DLC. So now you can create, synthetic options on Lightning Network or on-chain, and you can basically use this within the Bitcoin ecosystem. So, I think people just haven't been focusing enough on kind of what are the use cases. Yeah,
that's a very good point. I mean, Giacomo has been a very big proponent of it. I'm sure he's working on it, correct? And that's fascinating, though. DLCs where you can use Tether, right? Because, I mean, that's a big risk to take, especially with Bitcoin's price volatility that tends to trend upward. You could make a million sat bet that is essentially $100 USD today that turns into $1,000 within a year, and that could be stressful for people. And some people could regret making those bets. So being able to price those DLCs in dollars as we're in this transitionary period makes a lot of sense.
Absolutely. And of course, for us, like the other use cases, of course, is of course loans. If you can get access to a loan and you can lock your Bitcoin as collateral and then get access to RGB Tether, then that's particularly useful for people who want to get access to liquidity. But kind of the first thing that we're actually testing out is specifically just taking DLCs themselves right now, because that's the thing that's available right now that's in the wild, and just really experiment or basically like creating a mini product with DLCs that allows for Bitcoiners to be able to go and test it out and use it with their mainnet funds today.
What's this product look like?
Yeah, absolutely. It's basically it's kind of a mini product for Bitcoiners to be able to bet, on the price of Bitcoin, be able to bet on the election, and it's a web app. So you can go. It's called atomic.finance/odds, and basically the whole idea of it is that you can go on there, and if you're say a crypto Twitter influencer, or you see something on Twitter that you disagree with, say you see someone on Twitter that's saying, hey, I believe the price of Ethereum is going to be over $500 by the end of the week. You can go and you can actually you can say, hey, I disagree with you. Why don't you bet me on it? Like allowing people to put their money where their mouth is finally, and doing this with actual DLCs, Bitcoin smart contracts.
Yeah. DLCs, another underscore technology, man. I think they're going to blow people out of the water. So I guess it's a good opportunity for somebody who's been close to Ethereum, working with their smart contracts, how they're constructed, and how much they cost specifically. Like, how do DLCs compare when you're talking about constructing a smart contract on top of Bitcoin instead of in the virtual machine, if you will?
Yeah, absolutely. So I think there's really two main things that like DLCs really bring to light, and number one is the privacy of the contracts created. So if you compare something to if you take Ethereum, really everything is transparent, which means that any financial contract that you create on Ethereum, everybody knows about it. If I'm sending DAI to someone, they know about it. If I'm taking out a loan on Compound, everybody knows about it. But in this case, with a DLC, you can create private contracts, which is really, really useful because it just looks like a regular old 2 of 2 multisig. And the other thing as well is you get transparency of the oracles. So of course, DLCs require kind of a trusted third party to make them work. That basically just comes in and basically reports on a particular price, whether it's the Bitcoin price or the election, for example. And it's really easy to get transparency on that oracle. But the other thing that's really huge about these oracles compared to Ethereum is that the oracles that exist in Ethereum are required to make an on-chain transaction to actually report on the price, which means that in times of high congestion, you may end up in a situation where the oracle is not able to report on the price correctly, and positions don't get liquidated, for example, which causes insolvency, which we saw in Black Thursday. So in DLCs, those oracles, they're simply signing, they're creating signatures, and that's all off chain, and there's no additional requirements other than that, which is really great.
Yeah, and it's essentially free to send and to sign and broadcast the signature, correct?
Yeah, and it's super cheap for anyone to set up. So anyone who has if you're a company and you have quite a bit of reputation, and you're able to go and set up an oracle, and people trust you to do that, it's really simple for them to do so, and kind of make some extra cash on the side.
Yeah, and then staying on this topic of the fact that the way smart contracts are constructed on Ethereum and everybody can see it, like, how prominent is bot front running, do you think, in the DeFi space? Like, being able to see what your competitors or counterparts in the order book are doing before their transactions are confirmed. Is there a lot of front running there?
Yeah, we actually heard about quite a few instances during Black Thursday where there was, if you take MakerDAO for example, so first off, there's actual bots in Ethereum that anytime if you make any type of transaction, and the transaction that you create, what the bots will do is they'll run a quick simulation of like, does this transaction make money? And if that transaction makes money, then they'll just replicate the exact same transaction at a higher transaction fee, and then kind of take whatever arbitrage opportunity you had in the first place. So that's one thing that like bots are doing constantly, and we've had this situation occur ourselves when we were testing out various things, and hey, here's an arbitrage opportunity. Oh no, it was just taken by a bot. So that's definitely a big concern. And then the other one is with liquidations as well. So you have a situation where miners now are actually reordering various transactions in order to kind of give themselves an advantage in the process of liquidating positions. So if you take like MakerDAO DAI, for example, miners are able to, if a miner is also a liquidator, then they could just reorder their transaction to make sure that their liquidation transaction goes through first. And we did see that on Black Thursday as well. So it's getting crazy out there.
That's insane to think of. And so it's by steelman this devil's advocate, transition to ETH 2.0, would it solve any of these problems?
Yeah, I think this is always a question, and everyone thinks that Ethereum 2.0 is the solution. But I mean, really, what's happening with Ethereum 2.0 is, first of all, when is it going to happen? We should create a bet on that, on this new DLC product. But I mean, I'm not betting for it, but
I personally don't think it's ever going to happen.
Yeah, well, I think first off, like, there's a big kind of issue with Ethereum 2.0, which is that it's a completely separate blockchain. And then on top of that, when you're dealing with Ethereum 2.0, like, the purpose of it is to solve some scalability problems. And they do that by, sharding the chain and having, various shards in, different places doing different things. But the whole reason that Ethereum DeFi works is because of composability and because all of these, decentralized apps can interact with each other. So what are you going to do? Have MakerDAO on one shard and have, Compound on another one, and, they can't interact with each other. So I think there's a lot of questions about, what is DeFi going to look like when this happens? And even if, Ethereum 2.0 is going to happen, and whether the transition can even be successful.
Yeah. I mean, it's the whole adage trying to do, I don't even know if it's an adage, it's a heuristic, trying to do too much at once is going to lead to some trouble, which I think the trouble's already here. It's just whether or not who you talk to. And so coming back to Bitcoin, like, how is Bitcoin being a comparatively simple system benefit you at Atomic Loans and as somebody building on top of Bitcoin?
Yeah, I mean, I think one of the things is, like, we get to sleep at night. So I mean, I've always said this about our contracts. Like, even when we had it cross chain, we had our contracts that existed on Bitcoin, and we had our contracts that existed on Ethereum, and those Bitcoin contracts were solid. I wasn't worried about any type of hacks occurring. The Ethereum contracts, on the other hand, there's just so much more surface area for things to go wrong, I think. And so one of the things I really like about kind of the Bitcoin ecosystem is that, the way in which things are built, really reduces the surface area for attack and the things that can go wrong. Bitcoin's script is very simple, but it's also very, it's very effective for building secure contracts. And so I think that's one of the things that, we've really liked kind of working in Bitcoin. Oh, and the other thing as well is actually being able to iterate. If you think of the development cycles that exist in Ethereum, generally what happens is these projects, they take, 6 months, 8 months to a year to go and build up these contracts for every possible scenario that could happen. They get it audited. They pray that there's no bugs in it, and then they go and release it. And the problem with that is that, if there are any bugs in it, well, either you put an admin contract in and you can upgrade it, or you don't, and now you have a bug, and now you have a honeypot. And so in Bitcoin, one thing we've liked about DLCs is the ability to iterate. We can go and put something out there in the wild, and we can make improvements to the software over time, because all the contracts in Bitcoins are single use. You use one contract, you use one 2 of 2 multisig for a DLC, and then it's finished and it's done, and you can actually upgrade the software that you're building really nicely.
Yeah, and that's because it's just single transactions, correct? Or the DLCs are in the transaction format, correct?
Yeah, it's mostly because it's Bitcoin revolves around, like, single use contracts. So, like, you can go and in Ethereum, you go and you create a smart contract, and then it exists there forever. Whereas in Bitcoin, you send your Bitcoin to a P2SH, for example, and you send it there, and then you redeem from it, and that's all you do is you send it and you redeem it, and that's really simple, and it really reduces the surface area for attack.
Yeah. There's beauty in Bitcoin simplicity, freaks. I keep saying it.
Absolutely.
So, how long do you think it takes for this sort of space on top of Bitcoin to mature? You guys are, it seems like, early first movers. I'm taking a risk, right? Like, RGB isn't here yet. DLCs are pretty new, and the first implementation, or the first DLC live on mainnet, happened only a couple weeks ago. So what do you, if let's just assume that all the kinks are fleshed out and you have the ability to build what you want to build, what's on your roadmap? What types of products and financial offerings are you going to give users of atomic loans on top of Bitcoin in the future?
Yeah, absolutely. I think one of the things that in general right now, like things are very early. Shared Bits has been doing God's work and Crypto Garage as well, and kind of building up DLC to where they are now. The RGB team has been doing this, the same thing, but it's slow moving, and it's slow moving to figure out, how are all these pieces going to fit together. I think the reality is, it's going to take a bit. It's going to take a long, it's going to take a little bit of time to get to, kind of advanced financial contracts that are non-custodial on Bitcoin. But I think it's going to take less time than people think. So if you take RGB, for example, I mean, we're going to have Tether, on Lightning by end of year. I mean, that's, fingers crossed. And so, once you have that, if you have that by end of year, then, you could see a DEX by, March of next year, someone creating a DEX on top of, with Bitcoin and Tether, for example, on top of Lightning. DLCs are, there's already DLCs happening right now with the election. We're about to kind of, beta test and put out our mini product for being able to bet on various things, in the next couple of weeks now. And people will be able to do that on mainnet. And so I think simple things like that, we're going to see pretty soon. I think in order to get to more advanced financial contracts, like if we're talking about standard options, if we're talking about margin trading, those types of things I think will take a little bit longer because we need to do a little bit more work on the things that are important for those types of contracts. So for example, if I'm entering into like a margin position or a standard option, I need to be able to have transferability of that, and I need to be able to have some type of order book where I'm able to buy and sell it, and that's essential for any type of those contracts to exist. And it's going to take a little bit longer to get there and to get the libraries built and to get the interactions built in order to get to that place. But that's kind of where we're thinking is DLCs will enable betting in the first place, then they'll enable standard options. And then after that, we'll be looking into building more advanced, type of contracts, whether it's, simple margin or margin trading, or even, loans, maybe several months to a year down the line.
Yeah. So I can hear the Bitcoiner screaming in the background. Why do we need DeFi? Why do we need it? Like, who are the target customers outside of degenerate gamblers or traders, if you will?
Yeah, I think part of it is a question of, I'll ask you a question, Marty. Like, what do you think of the financial tools that exist like for Bitcoin right now?
I think they're pretty rudimentary. The pretty high interest rates too. But yeah, I think, and the custodial aspect of it, for some of them, I do prefer. If I am going to engage in some of these financial products that force me to send my Bitcoin to another address that I don't have complete control of, I'd rather have a multi-sig setup where I can make sure that it's not being rehypothecated, and that they actually have the Bitcoin in the contract at the end of the day. I guess that would be my feelings on it too. I'm a humble sat stacker where I just stack sats and throw them in cold storage once they hit a certain threshold and rest on my laurels.
Really, Marty? I thought you were a 100x leverage trader.
I tried it before. It's got my dick pushed in. It's not worth it.
I think that's a lot of people. Yeah, I mean, I agree with you, and I think to be honest, in the kind of the centralized finance space for Bitcoin, I think there are some tools that exist that have done a really good job of being transparent and honest with their customers. I think like Unchained is a really good example of that. But there's other ones that are doing, rehypothecation left and right. And the reality is that, what kind of future do we want for financial tools for Bitcoin? Do we want all the financial tools that exist for Bitcoin to exist within kind of what I call, crypto banks, where whether that's a centralized exchange or whether that's, some other tool that that requires me to give up, custody of my Bitcoin, and they have full control of it, and then I do whatever I want, and they're essentially the gatekeeper for me getting my Bitcoin back? Or do we want financial tools for Bitcoin that retain as many properties retain as many properties as Bitcoin as possible? So, Bitcoin is really great because it's verifiable, it's scarce, seizure resistant, auditable. And why can't we have a lot of those properties for our financial tools as well? And so, if we're able to build up the ability to create, whether it's betting products and in a non-custodial manner, or whether it's, margin trading in a non-custodial manner, and I'm just, reducing the risk of the financial contracts that I'm creating, in our minds, like that's a great thing, because it makes sure that I'm always able to exit, whatever that position is, and that I'm not locked into whatever, wherever place or whatever crypto bank I'm depositing my Bitcoin into. Because at the end of the day, like, a Bitcoin is different than a Bitcoin IOU.
Yeah, that's a very good point. It's crazy. Are we going to get the decentralized future? And so so I get to, again, steelman this, what are the trade-offs then in engaging in set up with atomic loans as opposed to something like an Unchained? Like, I guess some would argue that you have some amount of recourse if something goes wrong with a custodian, that if these contracts are set up where you really can't control and don't know your counterparty at the end of the day, there's less recourse if something goes, this shit hits the fan. I guess that would be the pushback there.
Yeah, absolutely. I think the questions there are really like, what are the things that are, how is the shit going to hit the fan? And the thing is, in Ethereum, the way that shit hits the fan is there's a smart contract bug, and there's something wrong with the contracts that are being created. Whereas the question in Bitcoin, where, shit hits the fan, is more, I have a DLC and my Oracle didn't sign. Okay, well, you're at the end of the day, you're trusting you're like, even if you use Unchained, like you're trusting a central party. If you're using a DLC, you're trusting a central party with an Oracle signature. And the deals, it's a different level of trust, essentially, is kind of the end solution. And so, yeah, I think that's the main difference, is like, you're always going to have to trust something with any type of these financial contracts, because you need to get access to the price data. But it's like, how much of that do I need to trust, and what elements do I need to trust, and what are the things that can go wrong? And I think generally, if it's being built on Bitcoin, and if these financial contracts are being built on Bitcoin, and they're built properly, which most things on Bitcoin tend to be, then there's a lot less things that can potentially go wrong.
Yeah, there's that sliding scale of trade-offs.
Absolutely.
It's fascinating. Do you feel like you're onto something that most people, I mean, this has sort of been a theme of my questioning here, is like, how come people aren't paying attention to this? How come people aren't paying attention to this? Like, how early are we, and how robust of a marketplace do you see what you're working on becoming in 10, 20 years?
I think it's interesting, because I think we're in, 1985 of the internet. I don't know, in terms of financial contracts, at least for Bitcoin. What's interesting is, like, Lightning. What's Lightning good for? Lightning's good for payments. It's good for games, but there's no financial contracts for it, right? Like, there's no kind of more advanced like feature set that we can do with it. And so, what
about LM Markets? Do you like that?
Oh, LM Markets is awesome. But of course, like, and I think they have the intention to go non-custodial, but of course, like, LM Markets today is custodial. And I love what they've been building, what they've been trying to push forward. But I think they'll always run into, I guess, like, it being custodial, they'll run into regulatory problems. So if they can make that non-custodial, not with DLC specifically, because DLCs are good for options specifically, but a different type of Bitcoin contract, then I think something like that is going to be phenomenal. But yeah, I think we're very, very, very early on in the stack, and we don't even have a DEX for Bitcoin yet, between Bitcoin and Tether. That's how early we are.
Yeah, this popped in my head earlier. I forgot to say it, so I'm happy you said that. This stuff is basically counterparty done the right way, right? Because Bitcoin did have a DEX and counterparty at some point with the color coins on top of it, but proved. Was that using op return? It was using some opcode, wasn't it?
Oh, it was. I can't remember if it was using op return or yeah, it might have been using op return, and it was also. I remember they was it Luke Dash Jr. He like changed kind of the structure of Bitcoin to make sure that counterparty wouldn't work, and then
yeah, it was actually pretty fucked up, Luke.
Oh man, but I mean, like if it's that, I mean, also if counterparty was that fragile, then it probably wasn't here to stay. But in general, I think the tools that are being built, like say like RGB, for example, that doesn't rely on any kind of the network aspects or a Bitcoin node to be able to function properly. I think once we have things like that are more resilient, then then it will become very, very interesting.
No, I agree. How old are you, if you don't mind me asking?
Yeah, I'm 22.
Holy shit, dude. You're fucking badass, man. Again, because you mentioned regulators earlier, like, so building these products that could potentially defang regulators at some point in the future. Do you feel like you're living on the edge?
Yeah, I mean, we might need to. I mean, we we always try to build things that are compliant at the end of the day. I know we live in Canada, so the SEC is just south of the border. So, but if something like what happened in 1933 occurs again, we're gonna have to skip town. So, yeah, it's hectic. I don't know. We always think that. I mean, at the end of the day, I think a lot of Bitcoiners agree that. We're on the pathway towards the separation of state and money, and so I think eventually, there's only one way to get there, and it's to make sure that whatever we build can't be easily stopped. So,
yeah. So how'd you seeing the product that you've built in Atomic Loans is very impressive in the ideas in your head. Like, how did you develop this? Engineering prowess, I guess, at such a young age? Like, what were you working on before you even found Bitcoin? Have you been building stuff since you were younger, or?
Yeah, I remember. I mean, I was building stuff since I was, I remember when I was like 9 or 10, just right clicking on a website, being like inspect element, and being like, holy crap, how does this work? But I had a phase kind of in elementary school, high school, where I was, building a ton of Flash games, and at the time I was like, Flash is the future, and of course Steve Jobs killed that for me, but that was fun back in the day. So I had a lot of fun kind of building games, back then, and I guess that translated. And then of course, like my dad, kind of how I got interested in Bitcoin is my dad's always been talking about kind of trusting the government, and kind of what do you need to be worried about, or like what happens if there's a nuclear strike on Canada and you need to escape, where are you going to go, so I've always been kind of thinking about those things. So it just happened that those, kind of this, love of programming and what if shit hits the fan, I guess those two things coming together made me really interested in Bitcoin.
Some would argue, I believe Francis Poulet, that shit is currently hitting the fan in Canada. What I imagine your dad's been angry this year.
He's been escaping to the cottage with no Wi-Fi or anything. So I think he's living a peaceful life while everyone else is losing it. But yeah, I mean it's been crazy, and it's been crazy the amount of the amount of rights that have been kind of taken away, I suppose, in a way, and the way that people aren't fighting back against it. I think Canada has been, as a country that is very, they like to follow the rules a little bit more than down south where you guys are, and so people don't tend to be, don't tend to fight back as much. So I think that's unfortunate, and we're starting to see that with kind of what's happening in Canada.
Which is so weird because there's so many incredible Bitcoiners in Canada building some of my favorite products that exist on the market. It's like, whoa, it's like. It's breeding some of the best, most actionable anarcho-capitalists I've come across to date yet. You're sort of beholden to this extremely incompetent government and Justin Trudeau. That dude is such an idiot. And the logical inconsistencies of all the lockdown stuff that's been going on is it's infuriating here. I can't imagine how infuriating it is north of the border.
Yeah, well, no kidding. Well, it's gotten pretty bad. I mean, it's interesting for these Bitcoiners because, you know, a lot of people, you know, you see on Twitter all the time these Bitcoiners like Francis, like, why don't you move to the U.S. already? And you know, maybe that's, you know, maybe that would make sense. But it's been crazy, like in Quebec, you know, the police being able to get, you know, subpoenas for, you know, going into people's houses for not. For neighbors snitching on them for having more than the capacity than that is, you know, allowed for COVID, you know, just crazy things that are occurring.
Yeah, make sure you're wearing a mask when you have sex. It's important. It's going to make all the difference.
In the UK, you're not allowed to have sex, are you? You don't live together.
No. I believe at one point, I forget who it was, which country, but there was recommendations of only having sex through a glory hole.
Yeah, that's the safest option, you know. That's the wholesome option, people.
The wholesome, pun intended. Yeah. No, to bring it back to a serious note, you're 22. I'm 29. I'm not that much older. I'm 7 years older. There's enough distance where it's like, all right, what are these young kids thinking these days? So do you find yourself as a 22-year-old focusing on Bitcoin and liberty in the digital age? Are you an outlier in your age group, would you say, or do you feel are the youths of the world beginning to rise up behind the scenes and really think about this stuff?
Yeah, I mean, it's interesting because I think a lot of my social circle, like specifically, you know, comes from you know, University of Waterloo, and I think you know Waterloo is of course where Vitalik went, and so you know there's a lot of I think there's a lot of kind of like, you know, more Ethereum presence there, and there's a lot more I guess shitcoinery in Toronto as well. So you know, the people that we interact with, you know, they're much more kind of focused on the idea of, you know, blockchain, not Bitcoin, not blockchain, which is unfortunate. But to be honest, like, you know, if you talk to your average kind of person, I guess, who's 22, you know, they've of course heard of Bitcoin, but I really don't think they're aware of the ramifications of why Bitcoin is important, or what does the concept of printing money mean? You know, like during COVID, you know, people have been getting, you know, stipends here in Canada. I think it's every 2 weeks. I have to double check. But you know, when you ask them, like, where does that money come from? Where do you think that money comes from? Their answer is, oh, I don't know. They have that in reserve somewhere. It's like, well, no, they're printing that. So I think there's definitely some more waking up to do. And I think the other thing is that your average Bitcoiner is really, you know, a little bit older than myself, because, you know, they got in when, you know, I mean, Bitcoin was released when I was, you know, 10 years old, you know, so, you know,
so crazy.
So it's yeah, it's pretty wild. So I wish I was playing games back in the day and, you know, I don't know, playing RuneScape and getting Bitcoins, but unfortunately I wasn't. But
yeah, don't worry. I was 17, drunk at a Phillies parade when Satoshi dropped the white paper. I was nowhere near thinking about Bitcoin, but I'm finicking around with my computer right now because I actually coincidentally interviewed Matthew Mazinksius from the Crypto Voices podcast, and they do a quarterly update on the world's base monies in Canada, trailing 12 months. So this chart, I pulled up a chart in the last 12 months when this report was dropped, which was a month ago. So this data is a little stale, but pretty fresh, actually, only a month old. Canada had expanded its base money by 431%, second in the world only to Norway, which had done 851% expansion. It's crazy how much money Canada has printed, considering how small your country is as well.
Oh, absolutely. Well, and the other thing I think people that you know, people don't realize, and I looked at this number a long time ago, so it might be very, you know, might be incorrect, but you know, the actual backing of the actual money that's backing you know, capital that exists in Canada today, you know, banks are 0.2% backed. You know, so if you put $100 in the bank, you know, they have 20 cents. You know, you know, at least in the U.S., it's a minimum of 10% backing, and so it's you know, I mean, we're ready for a 2008 here, in my opinion.
Not anymore. That changed in March. The backing requirements we're catching up with you, but Canada sold all your gold. You get over like over the Trudeau, his stint as the prime minister. He sold all the gold. There's none left.
That's what happens when you don't believe in sound money.
Right. That's why talking to Steve Barber, he tweeted out today, hinted that the Canadian city, I'm just assuming it's a Canadian city, it could be wrong, is mining Bitcoin. With the amount of abundant energy that you have in Canada, Alberta specifically, and even in Quebec with the hydro electricity, like there is an opportunity to change the tides via Bitcoin. But it is going to be a hard sell and a long process. And Canada's lucky to have entrepreneurs like you who are forward thinking and working on these problems, because the world's so fucked right now, man. It's not only Canada, it's everywhere. Even here in the United States, it's pretty bad.
Yeah, no kidding. Well, we're lucky to, for Bitcoin specifically, we're lucky to have, cold weather half of the year. So, that keeps the miners running.
Right. Keeps them cool.
Absolutely.
I'm trying to think of what else we can latch onto here. We've done enough Ethereum hating in this podcast, but I can always do more. How does the developer community view the DeFi pumpers? I have to assume there is a developer builder community that's altruistic and really wants to build products that help the world, but it seems like it's being co-opted by degenerates.
Yeah, I definitely know. What's interesting is I know a lot of, we've heard from a lot of like Ethereum maximalists that are hating what's going on in kind of degen DeFi right now, which is hilarious. Like just being really, really dismayed by kind of what's going on in the ecosystem right now. And even, I know I have a few folks like kind of in the Ethereum space that are like, tweeting about things like, you don't need a token to create a project, and I think it's really interesting to hear kind of like the two sides, because there seems to be this disconnect between, the degens that are going and, building a project in a week and launching a token, and like these developers that have been around and trying to build like legitimate projects for a longer period of time. And it's just crazy to see the disconnect.
Yeah. No, and it's interesting with atomic loans and your product specifically. I mean, you've probably seen it up front and personal, like what's the ratio of Bitcoin used as collateral to Ether, like as a token? Like, and have you seen up front, like what people choose as collateral and trust as collateral? And does that give you any insights into what is a better digital money, if you will?
Yeah, I think we've seen a lot more interest in using Bitcoin as collateral, like especially on Ethereum, like MakerDAO, for example. I remember, they were, of course it's wrapped Bitcoin. So, I imagine a lot of people are a lot more wary of putting, wrapped Bitcoin into Ethereum. But regardless of that, there's $85 million of Bitcoin on Ethereum in MakerDAO. Another one of the protocols, Aave, they have, I'm just checking here actually. I imagine they have, I don't think they have quite as much, but I imagine they're getting up there in terms of the amount of like Bitcoin that's actually locked, on their system. Yeah, they have like 124 million. And so, clearly there's a demand for people being able to use, Bitcoin, as collateral, because at the end of the day, it is the best, collateral type. Like what is better as a collateral type than, are you ever going to be able to use it than Bitcoin? And so it's interesting that people are willing to, they're willing to take a Bitcoin IOU to be able to have exposure to this scarce asset. So I think that's definitely, it's definitely exciting for Bitcoin.
That's another thing I've wondered too, all this wrap Bitcoin and these claims on Bitcoin that are used in these smart contracts that are susceptible to bugs from time to time, as we've seen. Like, so at the end of the day, if that smart contract goes bunk, it gets locked like the Simplicity contract did, and you just can't access the funds, you still have the Bitcoin at BitGo. And so to me, it's like it's a weird, like even if you play the game, you can take gains from that smart contract that's using that IU for a time until it gets locked up, but then you get your collateral back at the end of the day. And I can't fully flesh out my intuition that there's some fuckery going on there. Like it seems like you're able to get all the upside and none of the downside with that, which some people would be like, oh, that's a benefit, but it's like it's fuckery in my mind.
Well, yeah, it's not immutable. I mean, it's basically like using your Bitcoin on an exchange and, Ethereum is essentially the exchange and, the exchange had a bug. And so that's fine because they still have your Bitcoin in cold storage. So they'll just give your Bitcoin back to you. And so it doesn't matter what type of, contracts you create, on Ethereum because Bitcoin is always holding there, sitting there with your Bitcoin at the end of the day. So I mean, yeah, it's a little bit of a weird situation because it's really, people talk about Ethereum as a layer 2 for Bitcoin, but I mean, Ethereum is as much of a layer 2 for Bitcoin as Coinbase is a layer 2 for Bitcoin. I mean, I can send to my grandma on Coinbase, and it's no fees. I don't have to pay any fees on Coinbase to send Bitcoin to my grandma.
Right.
So
it's it's very interesting. And
I think the other thing as well that people don't realize is that what's interesting is Bitcoin IOUs actually compete with Bitcoin itself. Because if you think of a Bitcoin that exists on Ethereum or a Bitcoin that exists on Coinbase, for example, there's different properties that exist for that Bitcoin. All of a sudden you have Bitcoin that doesn't have any transaction fees. It's not censorship resistant. It's not auditable. It's not verifiable, but you don't have to pay any fees versus Bitcoin that exists on the base layer is, verifiable, auditable, scarce. But you're paying transaction fees for it. So I think it's very interesting how both of those actually, directly compete with each other.
Yeah, that's a good point. Right. As a miner, it's like you don't want those fees taken away from you via an IOU. There's some weird game theory dynamics at play. You can't deny. And it's that's the other thing. All this stuff can go on until one day it doesn't. Like we found out with the DAO hacker. And again, the plan to transition to ETH 2.0, do you literally pause everything that's going on, transition, then restart? Is that how am I correct in assuming that's how it's going to work, or is there going to be some transitionary compatibility?
Well, I always wonder about what is the developer overhead going to look like, there's something that's very interesting going on right now. So, even if Ethereum 2.0 launches and everyone's kind of, utilizing it, and, what happens is MakerDAO go and they have a version that's on Ethereum 1.0 and on 2.0. Does Compound do the same thing? Do all these contracts that have been working together on Ethereum 1.0, do they all go and, relaunch the same thing? And that exists on Ethereum 2.0. And what does that transition actually look like? Because it's a completely separate blockchain. It's all these projects needing to, pack their bags and we've got a new spot for you, and what's interesting actually is that we've heard of a lot of projects in Ethereum DeFi that are now planning to move to other blockchains. For example, Solana, which is this other layer 1. That probably apparently has a bunch of new improvements over Ethereum, for example. A bunch of DeFi projects have been talking about moving over to Solana because, Ethereum 1.0 is just not working for them anymore. But, I think the question for us was always, okay, when does it stop? Ethereum, Ethereum was great because everything should cost 5 cents. And you do everything at the base layer, which means that it's not going to be like that forever. And then as soon as it's not, okay, well, you just jump ship to Polkadot or Solana or Cosmos, and then you go build your DeFi project there. Well, then what happens when everything's being done at the base layer on those chains, and then those ones become congested? Are you just going to move to the next one? And where does it end? There's no loyalty.
There's no loyalty, and there's no ability to plan for the long term, which circles back to what we got into earlier. And so again, to keep steel manning a lot here. So how would potential upgrades to Bitcoin like Schnorr signatures, Taproot affect the products you're building? Would you have to do any of this re-architecting if they're implemented?
Yeah, so there's some improvements specifically that Taproot brings that enables a lot of kind of interesting stuff for us. One of those is actually transferability of like DLCs over Lightning, for example. So that's really exciting because then imagine you and me were able to enter into an options contract, and then and then we're able to trade it to a third party whenever we want, and we're able to route that over the Lightning network. There's some exciting things like that are definitely coming to light. I'm also really excited about kind of what Jeremy Rubin's been working on with CTV. All of a sudden, CTV is implemented in one Bitcoin transaction. You can open 1,000 Lightning channels. That's pretty cool. And then the last one I think is probably Ccash no input, or now known as Ccash any prev output, like being able to finally have L2 for Lightning. I mean, I think that specifically, and this isn't something I've talked about yet, but that being able to work really effectively with kind of what's happening with the development that's happening with state chains. And for those that don't know, state chains are basically kind of a side chain for Bitcoin that is censorship resistant. The ability for state chains to actually be able to be created in a manner that doesn't have ridiculously long timeouts or long timeouts for Lightning in general. I mean, that's just going to accelerate adoption of Lightning like crazy.
Yeah, let's give a refresher on state chain. State chain is basically doing transactions where you transact in private keys, correct? You just move them forward or to a next user.
Yeah, exactly. The idea is basically, every user, they're basically locking their funds into it's kind of like a 2 of 2 multi-sig essentially, and one key is held by the state chain entity, and the other one is held by the users. And it's essentially a process of, it's like you're transferring the private key from like one party to the next, but you're not actually. So no party reveals the private key that was before them. But the basic thing that it enables is it allows you to lock into this kind of side chain, and it allows you to exit at any time. So if, say, the state chain entity goes offline, I can still get my money back. And the other thing is, in a capital efficient manner, I can send money like that exists within the state chain. I can send Bitcoin to anyone I want, without them needing inbound liquidity and like Lightning, which is the common thing for problems in the layer 2. But what this enables that's really interesting is it enables DLCs to be done in a manner where you can have instant transferability of DLCs without any capital efficiency requirements. So say me and you, Marty, say we go and we enter into a DLC and we want to transfer. I'll use Ben Carmen because he was just on the podcast. But say we want to transfer to Ben. We'd be able to transfer that DLC without him needing to go and set up a Lightning node and have channel liquidity in there, et cetera, et cetera. We can just do it, by those private keys basically being moved.
Yeah, it's fascinating. Shout out to Ruben Thompson for putting that idea forward. Yeah, it's crazy, man. And it's like, so I guess I'm trying to phrase this right before I get yelled at. Like, there's part of me that wants to move fast and implement all these things. Are you okay with the pace of development on these particular upgrades right now, or is there any points of frustration where you're like, hey, this stuff seems ready, we could probably implement it pretty safely without too many headaches?
Yeah, I mean, to be honest, like I haven't had a ton of kind of involvement with looking into kind of these features and those getting implemented into Bitcoin, other than being involved kind of in, I guess, a little bit in kind of the discussion for Taproot. But I from what I've seen from the Telegram groups that have been created for Taproot, is that there's just a lot of kind of back and forth, and no one's really willing to put their foot down and say, like, this is how it should happen, because as soon as they do that, they're considered a Roger Ver, and so I think there's a lot of scar tissue, I think, from SegWit, and people are scared, and I think that that's not great. I also understand why that's the case, and and why people don't want to necessarily push things, push people too far, or they want to make sure that everything is built properly in Bitcoin. But I think at the same time, if we don't come together and figure out a way to allow for some of these changes that are very rudimentary, and don't have that much of a intense feature set that are going to negatively affect Bitcoin. If we don't get some of these things moving along, then we're going to be at a standstill. And the reality is that we're going to have a future where financial tools for Bitcoins are going to exist within crypto banks. And we just have to realize that if we don't push the needle forward, obviously don't do it too fast. We're not here to move fast and break things. We're here to build for the long term. But if we don't make sure that some of these things get through, then that could be the reality that we're facing. I don't know. That's my 2 cents. Obviously, other Bitcoiners probably have a lot different opinion. But
Yeah, no, it sort of echoes what Craig Maxwell wrote in a Reddit post or a Reddit comment, I believe a little bit over a month ago. Like, hey, it's like if you stagnate too much, people are going to stop reviewing and then stop building wallets and libraries and other things that support these upgrades. And there is a window of opportunity that needs to be seized upon, especially if you consider how hectic things get during bull runs. It's for you freaks who've never experienced a bull run. It's pretty distracting. You can't think about anything about the price or talk about anything about the price. And developers have even come out and say, like, yeah, it's even hard to write code and review code during these bull runs.
I can definitely relate.
arguably when it's most important too, when the stakes are raised considerably due to the amount of money being preserved by the network.
Yeah, and I think one important question here is with all these changes that exist in Bitcoin, what do we want the future of Bitcoin to look like? Do we want Bitcoin to end up like gold, where it's sitting in vaults, in various financial institutions, and it never moves from there, and your average person might have some gold, but they don't really do much with it? Or do we want Bitcoin to be programmable money and be able to be used for various things? And I think it's really just up to us, the community, to decide, what do we want the future of Bitcoin to look like?
Yeah. Me personally, I just want the optionality. I want the option to be able to do either. And it seems like we need to build out more of that optionality on the non-custodial programmable money side, which you're working on. And thank you for working on that. It's important. And that's, many people will be like, hey, I don't need this. I don't want this. Why are we building this on Bitcoin? But again, if it doesn't erode any of the assurances that make Bitcoin and provides more optionality for Bitcoiners to explore or leverage Bitcoin, then I have no problem with it. Again, I'm a humble sat stacker, but I have no problem with optionality.
I completely agree. And I think at the end of the day, as long as what's being built doesn't negatively affect the base layer, that doesn't negatively affect everyone else who's subscribed to what exists in Bitcoin and what exists there today, I think that's it's a good thing. As soon as you start getting into things like we're going to massively change how Bitcoin works and add new opcodes that enable all these fancy things to be done at the base layer, then I think there's another question to be had, which is is this going to negatively affect what people are doing today? But if these things are being built mostly off chain, I don't see why it would be a bad thing.
Yeah, as a miner, I've got a theory that you can apply Jevons paradox to UTXOs. I think it would actually be helpful for a fee market too, like creating that utility on top where it doesn't touch the chain very often, but you do have to initiate transactions to get into that. That will create a robust fee market that and driven by the fact that UTXOs become more useful. The utility provided by UTXO increases significantly by the products and optionality that UTXOs can interact with.
Yeah, absolutely. I'm not familiar with that paradox, but I would definitely agree. And I think that being able to, at the end of the day, like Bitcoin should be used for settlement, and we should be building layers on top, which are starting to be built. We have layer 2, which is Lightning. We have layer 3 that's being built, that's RGB, and these are exciting because these things work together, and we don't need to do everything at the base layer.
Yeah. So Jevons paradox states it's a paradox because it's commonly applied to oil specifically. The paradox is that as you become more efficient with a good, so in my theory, a UTXO, I'm considering that the good, the fuel in this economy. You would assume that the more efficient you are, you'd use less of it. You can stretch that gas molecule or a UTXO further, but what actually plays out and why it's a paradox is that you actually consume more because it's more useful, more utility, and applies to more applications. Where it become more efficient with gas, people are like, oh, we'll consume less gas then, but you just do more cool things with it.
Oh, is this similar to if you have a road? I think LA runs into this problem where you have a road and then you have a certain number of cars, and then it's there's a traffic jam, and you just expand the road. That there's going to be less traffic on the road, but it actually just grows.
Yeah, I think you could probably definitely apply it to traffic, and if the pictures of LA traffic that I've seen are any indication, it seems that is the case. I'm not sure if Jevons paradox has been applied to that. It's supposed to be a positive though. Like that road's not providing any more utility, so I don't think arguably it's providing less utility because you're not getting to where you want to be as quickly as you thought you would. Now you got me thinking here, Matt.
We're going down the rabbit hole.
Yeah. Yeah. Shit, man. So where can we learn more about you? What you and Tony are building? How can we help if you guys need help? And what do you want to leave the freaks with here?
Yeah, absolutely. I guess really, you can check us out. We're rebranding from Atomic Loans to Atomic.finance, and kind of the first product we're putting out in kind of the Bitcoin space, specifically with DLCs, is our odds project. So you can check that out there. But the only thing I ask from the freaks is if you're a developer and you're interested in DLCs, or you're interested in being able to create financial contracts on Bitcoin, you should check out the DLC spec that we've been working on with that SureBits and Crypto Garage have been working on to kind of get a standard for DLCs out there, so that any clients that are really created with it will be interoperable in the future. So
yeah. Well, Matthew, it's young men like yourself that give me hope. It's crazy to see a 22-year-old creating products like the products you're creating and thinking the way you're thinking as a millennial boomer who can only write newsletters and shittily edit podcasts. I'm always impressed by the amount of impressive work that you guys put out. You and Ben Carman, last two DLC guests, under the age of 22 and under. It's crazy. So shout out to you guys.
Yeah, I appreciate that. I'm gonna change my Twitter bio to Boomer Millennial.
All right, well, freaks, go check the stuff out. I think we did enough Ethereum bashing to repent for your work on Ethereum. So I think the freaks will take it relatively easy on you. I know I saw somebody shitting on you on Twitter for taking consensus dirty money.
Leon the fact checker, I think it was.
Yes, Leon, if you're listening, hopefully you have a different impression now. Where can we find you on Twitter?
Yeah, I'm at Matthew J. Black, and be tweeting mostly. I've been trying to tweet some more DLC stuff lately, so we'll be pushing that.
Hell yeah. All right, I'll link to all this stuff in the show notes. Again, thank you. Enjoy the rest of your evening. That's all we got tonight, freaks. Peace and love.